Receivable financing. Then the last type of receivable financing is discounting. Discounting involves notes receivable. It involves disposing of notes receivable by way of endorsement of the promissory note. Take note that we are referring here with notes receivable. Notes receivable arises if a company received a promissory note. On the part of the receiving company, it is a notes receivable. And on the part of issuing company, it is a notes payable. So in order for discounting to arise or take effect, the receiving company should endorse that promissory note to third parties. The endorsement may either be with recourse or without recourse endorsement. So for problem-solving purposes, if not stated, always assume with recourse. What does it mean with recourse or without recourse? A promissory note is a negotiable instrument written, issued, and signed by the maker. That promissory note is actually a contract of promise to pay the payee or holder a certain amount of money upon demand or upon maturity date. So the maker is promising the payee or holder that he or she will be paying a certain amount of money upon demand or upon reaching the maturity of the promissory note. So promissory note, it is a written contract of promise to pay. So in a discounting, generally this is the flow. From maker to payee, it is the original transaction, original issuance of the promissory note. So the maker is the one recognizing the payable, the notes payable, while the payee or the holder will be the one recognizing the notes receivable. So from the maker to the payee, it is the original or the normal issuance. So in order for discounting to take effect, payee must endorse it to other parties, so-called endorsee. Upon endorsement, payee will be classified as endorser. The receiving or the holding company will be the endorsee. So discounting will take effect from payee to endorsee. Then discounting will continue if the endorsee will become the endorser and will endorse the note to other endorsees. So this is the general concept of discounting. What does it mean with recourse or without recourse? Discounting is with recourse. When we say with recourse, if the endorsee can run after the endorser for settlement of the maturity value, if the maker dishonors the promissory note upon maturity. What does it mean? Pag hindi binayaran ni maker yung holder ng promissory note upon maturity, the previous endorser is liable for the maturity value of the promissory note. The current holder of the promissory note can run after the endorser. So, pwede niyang balikan yung endorser niya. So, ganito yung with recourse. From payee, there is discounting. The payee as endorser endorsed the promissory note to the endorsee. Upon reaching the maturity, the endorsee will go to the maker, demand for payment, and if the maker dishonors the note, meaning the maker did not pay the endorsee, then the endorsee can go and run after the payee as the endorser for the payment of the maturity value. The payee, under a with recourse agreement, has the obligation to pay the endorsee of the maturity value if the maker dishonors the promissory note at maturity date. Discounting with recourse could either be conditional sale or secured borrowing. Discounting with recourse as conditional sale means if the endorser acknowledges a contingent obligation to pay the endorsee if the maker dishonors the note upon maturity. The endorser discloses only a contingent liability and may involve recognition of loss on discounting. However, it is a secured borrowing. Discounting with recourse is secured borrowing if the endorser acknowledges an actual obligation to pay the endorsee if the maker dishonors the note upon maturity. So the endorser reports a liability account in the statement of financial position and no loss is recognized. Either conditional sale or secured borrowing, discounting with recourse requires the endorser setting up of accounts receivable to maker upon dishonor of the promissory note and the removal of the liability from the records. So the accounts receivable will be computed as the maturity value of the promissory note plus protest fees and other charges. Then discounting without recourse, the endorsee cannot run after the endorser for the settlement of the maturity value if the maker dishonors the promissory note upon maturity. This is actually an absolute sale of promissory note. So, in contrast with recourse, pag with recourse, you still have obligation. You anticipate obligation. But under without recourse, no obligation already because that is already an absolute sale of the promissory note. So, discounting without recourse results to a transfer of ownership and risk and reward in collecting the amount of notes receivable and may involve loss on discounting. Under discounting without recourse, no contingent obligation or liability account is disclosed or reported in the financial statements. So in a without recourse, ganito yan. If the endorsee upon maturity of the promissory note demand payment from the maker and the maker dishonors the promissory note, the endorsee cannot run after the endorser or the payee. So no recourse. Without recourse or no recourse. So to apply, let us have this sample problem. Sabi dito, Loud Company received a promissory note from Clear Company for merchandise sold amounting to 3,055,000, dated January 1, 2019, bearing 12% annual interest rate maturing on December 31, 2019. On May 31, 2019, the company decided to discount the note with Savings Bank to obtain additional funding. The discount rate effective of the bank is at 14%. Use 30-day month counting. So yung requirements sa atin, number 1, to compute the net cash proceeds from the note discounting. Then 2, 3, and 4, pinapakompute sa atin ang loss on note discounting, assuming sa number 2, without recourse or absolute sale. Sa number 3, conditional sale, at saka sa number 4, secured borrowing. Before we proceed with our solution, i-interpret muna natin yung problem. Naka-receive daw si Loud Company ng promissory note from Clear Company for the merchandise sold. Yung halaga ng merchandise na ibinenta is 3,055,000, which will be the same amount for our promissory note. Yung date ng ating promissory note is January 1, 2019. At saka yung maturity niya nasa December 31, 2019. We can say that the promissory note is a short-term promissory note. Then, the note is considered as interest-bearing because of the phrase bearing 12% annual interest rate. Now, Loud Company hindi na naghintay ng maturity date na December 31. Yung ginawa, on May 31, 2019, diniscount yung promissory note with Savings Bank. At kay Savings Bank, yung effective interest sa kanya is 14%. Anong ibig sabihin ng use 30-day month counting? We're going to assume that each month in a year is equivalent to 30 days. So in a year, we assume 360 days. So here is our solution. From the face value of the promissory note na 3,055,000, we add the total interest applicable for the note. The total interest is actually the interest realizable if we're going to wait until the maturity date. So therefore, since from January 1 to December 31 is equivalent to 12 months or 360 days, we're going to assume here in our solution 3,055,000 times 12% times 360 over 360 days. Or pwedeng sabihin natin na 12 over 12 months. So yung total interest natin na idadagdag sa 3,055,000 will be 366,600. So yung maturity value ng ating promissory note will be 3,421,600. Then from our maturity value, magbabawas tayo ng tinatawag na discount. Yung discount is computed by multiplying 14% dun sa 3,421,600 na maturity value, then multiply ng period covered by the discounting, which is 210 days over 360 days. 210 days, pwede natin sabihin na 7 months equivalent. Or sabihin natin na 7/12 months. So yung discount will be 279,431. So yung net cash proceeds natin will be 3,142,169. Then yung net cash proceeds, i-compare natin sa carrying value ng promissory note, which is computed as, since it is considered as interest-bearing because of this phrase na bearing 12% annual interest rate, we're going to compute the carrying value of the promissory note by adding accrued interest doon sa face value. Face value will be equivalent sa principal amount ng promissory note. So accrued interest will be computed as 3,055,000 times 12% then times 150 over 360 days. Or pwede natin sabihin that is equivalent to 5 months over 12 months. Bakit 5 months? Kung mapapansin nyo, January 1 ang date, pero May 31, diniscount. That is equivalent to 5 months. So therefore, yung ating total accrued interest will be 152,750. So yung total carrying value ng ating promissory note as of the date of discounting is 3,207,750. Then get the difference, generally will be treated as loss on discounting, which is 65,581. Now for our journal entry, let us start with absolute sale or casual sale or yung ating without recourse assumption. We debit cash by the amount of net cash proceeds na 3,142,169. I-debit natin ang loss on discounting, which is yung difference sa 65,581. By the way, naging loss siya kasi we have received less than what we have disposed. Instead of receiving a carrying value of 3,207,750 as at the date of discounting, yung na-receive lang natin is 3,142,169. Kaya debit on loss on discounting, 65,581. Then we credit notes receivable, 3,055,000. Then credit interest income of 152,750. We credit directly to interest income because it is considered as earned already at the date of discounting. Under conditional sale, the same pa rin ang ating debits. Debit to cash of 3,142,169. Debit ng loss on discounting, 65,581. Then we credit interest income of 152,750. Pero yung isa pa nating credit will not be directly credited to the account notes receivable. Rather, i-represent natin siya as notes receivable discounted account. Yung notes receivable discounted account na to will be disclosed to notes of financial statement as contingent liability. Then last, for the secured borrowing. For the secured borrowing, we still debit cash for 3,142,169. Then we credit interest income of 152,750. Then yung ating isa pang debit, instead of debiting loss on discounting, we debit interest expense. Then, yung ating isang credit, instead of notes receivable or a contingent liability, na notes receivable discounted, yung ating i-credit is liability on notes receivable discounted. This time, it is an actual liability. Now, why did we debit interest expense under secured borrowing in contrast with loss on discounting sa absolute sale and conditional sale? Take note yung difference ng tatlo. Absolute sale or conditional sale, by the name, meron dyan nakalagay sale. So, kaakibat ng sale, either gain or loss. Kaya naglagay tayo dyan ng loss on discounting. While under secured borrowing, because of the term borrowing, kaakibat naman yan ay interest expense. In addition to conditional sale, when the maker pays the note upon maturity, we debit notes receivable discounted and finally crediting the notes receivable account by 3,055,000. However, if the maker dishonors the note upon maturity, just like this example, assuming Loud Company was charged by Savings Bank for 10,400 protest fee in addition to the maturity value of 3,421,600, yung gagawin dito ni Loud Company is to set up an accounts receivable equivalent to 3,432,000. Yung kabuuan ng amounts na 3,421,600 and 10,400. Then credit cash for the same amount of 3,432,000. The same amount yung kanyang i-collect dun sa maker. Then afterwards, debit ng notes receivable discounted and credit notes receivable for the entire amount of 3,055,000 face value. Now, under secured borrowing naman, if the maker pays the note upon maturity, we debit liability on notes receivable discounted, then credit notes receivable account for 3,055,000. But, having the same assumption that the maker dishonors the note upon maturity, same with conditional sale, the endorser or si Loud Company, pag sa setup ng accounts receivable, then magkikredit ng cash for the entire amount of 3,432,000, assuming yung 3,421,600 may kaakibat na protest fee na 10,400. The same assumption, yan yung amount na i-collect ni Loud Company dun sa maker. Then afterwards, i-debit ang liability on notes receivable discounted account, then finally credit notes receivable for the entire amount of 3,055,000 na face value. So that's our solution for sample problem 1. Then let's proceed with sample problem 2. Sabi dito, Quiet Company received a promissory note from Blur Company for merchandise sold amounting to 4,500,000. So therefore, yung 4,500,000 magsaserve na rin na value ng ating promissory note. Dated March 1, 2019. So yung date ng ating promissory note, March 1, 2019. So therefore, we assume na nangyari yung receipt of promissory note on March 1, 2019. The note is non-interest bearing and is maturing on November 30, 2019. Now, in contrast with sample problem 1, here in sample problem 2, the note is considered non-interest bearing. By this assumption, mag-iiba na yung ating computation later. Then, yung maturity daw nasa November 30, 2019. So, within 1 year, pero not equivalent to 1 year or 12 months. Then, on June 1, 2019, the company decided to discount the note with Spend Bank to obtain additional funding. The discount rate effective of the bank is at 12%. Use 30-day month counting. Ibig sabihin, we're going to assume again that every month is equivalent to 30 days or equivalent to 360 days for 12 months. Requirements natin, number 1, compute the net cash proceeds from the note discounting. Number 2, 3, and 4, we are required to compute the loss on note discounting, assuming sa number 2, without recourse or absolute sale, sa number 3, conditional sale, at sa number 4, secured borrowing. This time, ganito yung magiging solution natin. Take note na yung assumption ng problem, balikan natin ang problem, non-interest bearing ang promissory note. Therefore, yung face value ng ating notes receivable na 4,500,000 magsaserve na rin na maturity value ng promissory note. So therefore, from 4,500,000, magbawas na lang tayo agad ng discount. So therefore, 4,500,000 times 12% times 180 over 360. Bakit naging 180 over 360? Balikan natin ang problem. Yung date ng ating discounting started June 1, 2019. Pero yung maturity ng ating promissory note nasa November 30, 2019. So counting from June 1 to November 30, 2019, it is equivalent to 6 months, or if we're going to use 30-day month counting, equivalent siya sa 180 days. So therefore, dito, pwede nating sabihin 4,500,000 times 12% times 6 over 12 months. Or dito, 180 days over 360 days. So yung discount natin na ibabawas will be 270,000. Magiging net cash proceeds natin is 4,230,000. Then compare with the carrying value of the promissory note, which is yung 4,500,000 pa rin. Bakit 4,500,000 pa rin? Kasi yung assumption natin sa problem, yung note is a short-term, non-interest bearing promissory note. So therefore, kung yung promissory note natin na non-interest bearing is a long-term promissory note, mag-iiba po yung carrying value na ilalagay natin dito, on which magbe-base tayo dun sa amortization schedule. But since short-term yung assumption natin, 4,500,000 na buo, yung i-compare natin sa net cash proceeds. So therefore, yung difference, generally, iti-treat natin na loss on discounting, 270,000. So to journalize, under absolute sale or casual sale, we debit cash for 4,230,000, loss on discounting, 270,000, and credit notes receivable, 4,500,000. Under conditional sale naman, the same pa rin ang debits, pero yung credit natin, notes receivable discounted account, 4,500,000. Again, this will be disclosed as contingent liability dun sa notes to financial statements. Then last, under secured borrowing, instead of debiting loss on discounting, we debit interest expense for 270,000. Then our credit will be liability on notes receivable discounted account, 4,500,000, which will be presented as an actual liability or provision doon sa statement of financial position. So I hope nakuha yon. That's our solution for sample problem 2 ng discounting of notes receivable, and that concludes discussion for receivable financing.